Good morning, guys. Happy holidays. Happy Thanksgiving. And I'm really excited about today's guest. And what if I told you today's guest is going to talk to us how to get money for your private real estate deals without relying on institutions or hard money lenders? Jay Connor, he's an expert in this area. He's coming onto the podcast to showcase his expertise. And I'm really happy to have him on. So, Jay, welcome.
Chris, thank you so much for inviting me to come along and talk about what I'm so passionate about, that being private money, private lending, how to get money for your real estate deals without ever having to ask for money. There's no applications. You're already approved. Private money's had more of an impact on my real estate investing business than anything else, all the way back to 2003.
Yeah. Really interesting. And yeah, and I realized once this door opened, there's this alternative avenue for funding as opposed to just, you know, all that tedious rigmarole that you have to go through the banks. There's this area. So talk about, your journey, what motivated you to explore private money as an alternative to traditional bank loans, and how did it transform your real estate investment journey?
Sure. I backed into it, Chris, is what happened. You see, my wife, Carol Joy, and I, we've been investing in single family houses here in Eastern North Carolina full time since 2003. And from 2003 until January of 2009, those first 6 years that we were investing in real estate, all I knew to do, Chris, to get money for my deals, to fund my real estate deals, all I knew to do is go to the local bank, get on my hands and knees, put my hands underneath my chin, and beg and plead and say, please fund my deal. Please fund my deal. Applications. I had to pull up my skirt for the banker to look at my personal assets, had to show financial statements, pull the credit score, all that regular, as you called it, rigmarole. And that's a good name for it. That worked out okay, Chris. That worked out okay the first 6 years. But then something changed big time. In January of 2009, I had two houses under contract that I was going to invest in. And so I called up my banker. My banker's name was Steve, and I had this conversation, this kind of conversation, many times for 6 years. I called up Steve to tell him about the deals, the amount needed to fund the deal, et cetera. And I learned like that, Chris, over the phone, that the bank had closed my line of credit with no notice whatsoever. And when Steve told me that, I said, Steve, what in the world are you talking about? We've done a lot of business for 6 years. Why are you telling me that the bank has closed my line of credit? And Steve said, Jay, don't you know there's a global financial crisis going on right now? I said, no, Steve, but you just gave me a global financial crisis. Now, I don't have a way to fund these two deals. And so I hung up the phone. My first thought was, I sure wish my banker had told me prior to calling him up with deals on the contract. And I wish he had told me that my lines of credit had been closed. But nonetheless, I sat here for a moment, Chris, and I'm going to share a very powerful question that I asked myself right after having that conversation with my banker and learning that my line of credit had been shut down. And here's the powerful question I asked myself. I said, Jay, who do you know that can help you with your problem? And by the way, these people run around saying every problem's an opportunity. I want to throw up. I didn't have an opportunity. I had a problem. Now, that problem actually became an opportunity. If it hadn't been for that problem, I wouldn't even be here with you today. But nonetheless, the power's in questions. So I asked myself the question, who do I know that can help me with my problem? And I immediately thought of a good dear friend of mine, Jeff Blankenship. He was living in Greensboro, North Carolina at the time, investing in single family houses. So I called up Jeff. I told Jeff what had just happened in hopes that he can help me. And he said, Jay, welcome to the club. And I said, Jeff, what club is that? He said, the club of having your line of credit shut down at the local bank. He said, my bank shut me down last week. I said, Jeff, how are you going to fund your real estate deals? He said, Jay, have you heard of private money and private lending? I said, no, what in the world is that? He said, have you heard of self-directed IRAs and how individuals can use their current retirement accounts, retirement funds. If they're not happy with them, they can be a private lender as an individual, loan those retirement funds out to a real estate investor and earn high rates of return safely, securely, and either tax free or tax deferred. I said, Jeff, what in the world are you talking about? I never heard of what Jeff was talking about. So I studied private money. I studied private lending. I studied self directed IRAs. And Chris, I put my program together where I just went about simply teaching. And there's the key right there. I put on my teacher hat says private money teacher. And I just started leading with a servant's heart and teaching individuals, people that I've already got a connection with, that I'm at the church with, they're in my cell phone, I'm at the Rotary Club with them. I just started sharing what private money is and how my friends and connections could be private lenders and get high rates of return safely and securely. And you know what's interesting? In less than 90 days, I was able to raise and attract $2,150,000 in new funding for my real estate deals without asking anybody for money. And since that time, I've never missed out on a deal, a real estate deal, for not having the funding. I got 47 private lenders today that are funding our deals. And in 2011, I started traveling the nation. And now these days I do Zoom presentations, et cetera, sharing with other real estate investors how they also can get private money for funding of their real estate deals, whether it's single family houses. It also works for multifamily deals as well. And I'm just so passionate about it. And I just love to share with other real estate investors how they can use private money for their real estate deals too. Chris, I don't know if I lost you, but back to you, Chris.
Yeah, and it's really interesting. I really sympathize with you, and especially with banking and lending. It's so inefficient and cumbersome and just time consuming and just, waste everybody's time when it could be much more. When you learn this kind of this back door where you have these either private money lender or you have alternative sources of funding, business funding, like it just opens your eyes. So next, the follow-up question is just walk us through what are the top qualities private lenders look for in a borrower and how do you attract it? And how can real estate investors position themselves to attract private money, especially in this time where we're in this situation where the interest rates are changing and we have a new administration, and how people can take advantage?
Sure. One thing, there's three big reasons that private lenders or individuals actually love this opportunity to invest in our real estate deals. Number one, they make a lot of money. Making a lot of money normally gets their attention, right? So it's interesting. I've been paying my private lenders the same interest rate ever since 2009, while the market has been volatile with interest rates ever since that time. I've been paying my private lenders 8%. Prior to COVID coming along, the national average on a certificate of deposit at the local bank got down to 0.17%. About a year ago, you could go down here to First Citizens Bank in Morehead City, North Carolina, where I live, and you could get a 5% interest rate. Today, it's about 4%, and the rates are on their way back down. So I pay 8%. Of course, that was a whole lot more money than 0.17, and 8% today is still double as to what they can get in a certificate of deposit. So they make a lot of money. The second reason our private lenders absolutely love this opportunity to lend and invest with us is because their principal loan amount to us is secure and it is safe. So how is it secure and how is it safe? It's safe because we borrow what's called a very conservative maximum loan to value. We don't borrow more than 75% of the after repaired value. And then it is secure because we do not borrow unsecured funds. All of our private lenders, along with the promissory notes, they actually get a deed of trust or a mortgage, most people call it. And so that promissory note is collateralized so that they've got a legal recourse. If we as the borrower don't pay them, they can foreclose on the property and they get the property. Of course, that's never happened, but they've got that security as well. And then the third big reason that our private lenders absolutely love this opportunity is because their investment amount, the value of their investment, the principal loan amount is not volatile. And of course, what am I contrasting this private lending opportunity to? I'm contrasting it to the stock market. If someone invests in the stock market, first of all, they already lost money. There's fees, there's commissions, and the value of that investment can be less tomorrow than it is today. In this program with private money, the principal loan amount, the value of that remains the same until cash out. And the lender, the private lender, knows exactly the rate of return, the interest rate that they're going to receive. So there's no guesswork. They know exactly if they put $100,000 into a deal, they know that's an annual percentage rate, by the way. They know that for that year, if they haven't invested the entire year, they're going to earn $8,000 on that $100,000. So those are the three big reasons that our private lenders love this program. They're going to make a lot of money. Their investment is secure and safe, and they don't have to worry about the value decreasing in that principal loan amount. They know exactly what their rate of return is going to be. Back to you, Chris.
In the so I really love this where you're talking about the advantages. And one question I have for you is because you mentioned you were able in this private money lending. First thing is talk about is what is the difference for the audience? What is the difference between private money lending and hard money lending?
I'm glad you asked that question, Chris, because there's a lot of differences between hard money and private money. Now, in today's market, you got a lot of hard money lenders that are calling themselves private money lenders, and they're not the same thing. Now, by the way, I'm not bashing hard money lenders. Some of my best friends in the industry are hard money lenders, and I say you should establish as many relationships as you can, right? If the math makes sense, do the deal. But here's the differences between hard money and private money. And the list is long, but I'll give you the main differences. First of all, a hard money lender is typically a broker. That hard money lender or brokerage has gone out and raised money, capital, from private lenders. And the private lenders have invested in the hard money brokerage's fund. And then the hard money lender turns around and lends that out. So a private lender is an individual, a human being that lends money out to other real estate investors, either from their liquid investment capital and or from their retirement funds that they currently have. Now, there's this thing called self-directed IRAs. A self-directed IRA company is approved by the IRS to where they are what's called a third-party custodian. And that self-directed IRA company will take individuals' current retirement funds and allow that individual to lend that money out or invest that money out. And the returns they're going to receive are either tax deferred or tax free. So, anyway, between a hard money and private lenders, a hard money lender is typically a brokerage, a third party involved in the transaction. With private lenders, individuals, there is no middle person in between us, the borrower, and the individual private lender. So that's the structure. Now let's talk about interest rates, origination fees, and et cetera. Hard money lender, typically right now in today's market, most are going to be lending between 11, 12, and 13%. Most of them, depending on how long you've had the relationship together. Hard money is 8%. Private money is 8%. So hard money is going to have a higher interest rate associated with it. Another big difference is origination fees and points. The hard money lender, that's how they make their money, is by charging points or origination fees. They may be charging 3 points. If you're borrowing $100,000, then you got to take to the closing table, if it's 3%, $3,000 in points or origination fees to pay the hard money lender. In this world of private money, there are no points, right? There are no origination fees. So you're still at 8%. Another big difference between hard money and private money is what's called extension fees. So a hard money lender, the length of the note is typically going to be 6 months or 9 months. And with private money, it's going to be 2 years. So there's no rush to pay private money off. If you haven't paid the hard money lender off in 6 months or 9 months, they may extend your note, but what do they want? They want extension fees. They may charge 1%, 2%, 3% to extend. I know one hard money lender, if you haven't paid them off in 9 months, they charge an extra 1% per month for an extension fee. That's another 12% per year. Unless we have a private money, there are no extension fees. Now, what's another big difference between private money and hard money? And that is how much will the lender advance to you when you purchase? Most hard money lenders are only going to give you 65% to 80% of the purchase price. You got to come up with the difference in the form of a down payment. But in this world of private money, you get 100% of purchase. If there's rehab or renovation involved, you get 100% of the renovation cost, and you can actually borrow up to 75% of the after repaired value. That's why, and don't miss, this is a big difference. And that is when you're using private money, when you purchase a single family house, you get to bring home a big check without taking any of your own money to the closing table. Who wants to get paid to buy properties? So since we can borrow up to 75% of the after repaired value, let me give you a quick little example. Let's say that you're investing in a single family house that's got a $200,000 after repaired value. If it needs rehab of say 30,000 or whatever, you can buy that house, that single family house, all day long for $100,000, 50% of the after repaired value. But since you can borrow up to 75% of the after repaired value, that means on that $200,000 after repaired value house, you can borrow $150,000. That $150,000 is going to be wired into your real estate attorney's trust account. If you buy it for only $100,000, guess what? You get to bring home a big check when you buy that property without taking any of your own money to the closing table. So that's a big difference between hard money and private money. Hard money, you're going to be taking money to the closing table when you purchase. In this world of private money, you always get to bring home a big check when you buy. Chris, those are some of just the few differences between hard money and private money. Another big one is there's no limit to the amount of private money you can borrow from individuals. There's no limit to the number of private lenders that you could be doing business with. With hard money, there will be a limit to the amount of hard money that you can borrow at one time. And the biggest difference between private money and hard money is who makes the rules? Who is the underwriter? Who is setting the length of the note, the maximum loan to value, etc.? Guess what? This is a 180-degree mind shift. You, as the borrower, you are your own underwriter. Traditionally, institutional lenders, banks, they are the underwriter. They set the rate, they set the length of the note, they set the frequency of payments, they make all the rules. But in this world of private money, as the borrower, we're not asking for a mortgage. We're not begging, selling, pleading, trying to persuade or talk a lender into loaning us money. Instead of asking for money, we are simply offering an opportunity, offering a mortgage, and therefore we set the interest rate. It's not negotiable. The lender's not setting it. It's our program that we're offering. So this whole world of private money just puts you in the driver's seat of having as much private money as you want on the terms that you want. Back to you, Chris.
Yeah, and I like that really that synopsis and breakdown. And again, this is a kind of a 20-25 minute podcast, so there's more information. You can check out Jay's resources, which would be at the end of the show. So talk about building credibility with private lenders, and how do you find them, and what advice do you have for new investors trying to build trusting credibility and get funding?
Sure. There's three primary categories as to where you find private lenders. Those three categories of private lenders are, first of all, your own warm market, your own connections, people that are already in your cell phone, people you go to church with, people you are already connected with, people that you already see every week on a daily basis, wherever that may be. So we call that your warm market. The second category of private lenders are what we call your expanded warm market. So I know you will agree that there's a direct correlation between your net work and your net worth. So how can you grow your connections? After a while, you're going to you're going to run out of your own connections. So how can you expand your warm market? I teach other real estate investors how to blow up your connections and expand it very quickly. But here, for the sake of this show, I'll give you just one example that is very powerful, and that is Business Networking International, also known as BNI, Business Networking International. Business Networking International was founded by Ivan Meisner decades ago. And even the small towns in America, even here in Morehead City, we have a BNI chapter. There's about 20 members in the group. And here's the way BNI works. BNI is not a civic organization. It's not about raising money for charity and for other good works in the area. This is a business organization that you join, the local chapter. They truly only allow one professional in each chapter, meaning there's only one real estate attorney allowed, there's only one realtor allowed, there's only one electrician, one plumber, one HVAC, one general contractor, one CPA, one accountant, bookkeeping service, only one essential oil lady. You're getting my drift. There's only one person allowed of each profession. And so the purpose of being in BNI is to share leads with other fellow members. And so you're going to be giving leads of business to your fellow members, and they're going to be giving you leads of individuals that are looking for high rates of return, to where you can put on your teacher hat and you can teach people that they refer to you what private money is and how they can get high rates of return safely and securely. So you got your original warm market, people you've already got a relationship with. Then there's your expanded warm market. These first two areas are where you're able to teach and share with people what private money is, and they've never heard of it before. I've got 47 private lenders, and not one of them have ever heard of private money, private lending until I taught them about it and opened this opportunity up to them. The third category of private lenders are existing private lenders. These are individuals, people that are already loaning money out from either their investment capital and or their retirement funds to other real estate investors. So where do you find these people? A lot of them have got accounts at self-directed IRA companies, self-directed IRA companies. And so 70% of account holders at self-directed IRA companies want to lend money to real estate investors. So get connected with a self-directed IRA company. You can Google it. Just type in self-directed IRA in your city and state, and there'll be a company near you. And go to their networking events, and you can network with their account holders who are looking to loan money out. But there's one caveat that you need to be aware of, and that is you're not going to be putting on your teacher hat, teaching those people what private money is. They already know what private money is because they're already lending it out. So now that's going to be a negotiation conversation to where you are not going to be teaching them your program. You're just going to be finding out what it is that they are accustomed to receiving, and then you all negotiate the interest rate. So those are the three categories as to where you find private lenders: your own warm market that you can teach, your expanded warm market that you can grow quickly, such as joining BNI, and then existing private lenders that have accounts at self-directed IRA companies.
Yeah, and how can people find out more about you? And then we may have you on a future episode, because I wanted to talk about the risk as well. And how can people find you and follow you and learn more about your work?
Absolutely. First of all, Chris, I just launched my brand new private money challenge.com. That's www.privatemoneychallenge.com. Well, where is that? I just finished recording a series of 7 videos, and they're only 15 to 20 minutes long each. And it'll give a great foundation of what private money is about and how your listeners can get private money. So I invite your audience, Chris, come on over and join me. Enroll at www.privatemoneychallenge.com. And then in addition to that, I just started my 8th year of my podcast. And guess what the name of my podcast is? Raising Private Money with Jay Conner. So whatever your favorite podcast platform is, Spotify, iTunes, whatever it is, Just go over there and search for Raising Private Money with Jay Conner. And I'm interviewing people twice a week as to how they go about raising private money as well.
Awesome. I really enjoyed this conversation and so many insights. And thanks so much for coming on and keep up the great work.
Chris, thank you so much. God bless you.